Hello guys, good afternoon. This is FTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only, and as we know, past profit do not guarantee future result. The first market is volatile. As you take your trades, apply risk management. All right, we saw Wednesday that the United States has finally give way succumb to the pressure of cutting interest rate, right? Yeah, and I will notice one thing that despite the rate being cut, it was a hawkish rate cut, right? Yeah, it was not a dovish rate cut. A dovish rate cut means they will not cut rate again, right? That means it's only once, but a hawkish rate cut means after cutting rate once, they might only cut rate again. You know, as we have established before, we have saw from the Fed rate watch tool that will only cut rate by December, and the tune that Powell left that day was uncertainty, right? And which even strengthened the dollar more, right? So there's something you need to know about the market. You know, I told us something about fundamental analysis here, yeah, and I want us to see it. You know, my analysis that I posted, the last time I said we are going to expect a bullish dollar, right? Yeah, and these are the reasons I said, right? I said, number one, that the rate cut was well telegraphed, right? Yeah, and already priced in. That means if they priced in for the rate cut, investors have already adjusted their portfolio to absorb the shock, so they will not be shocked, right? And the tune that Powell left was a hawkish tune, right? Meaning it's not a dovish tune. If it was a dovish tune, that means dollar would have fell, right? Yeah, so that did happen. Then number two, I said US dollar rate are still high despite the rate cut, right? The rate was cut from 4.25 to 4%. That means it was cut by 25 basis point, right? Despite the rate cut, we saw that Japan the current interest rate of the US is still higher than that of Japan, right? It's 25 basis point, right? So Japan is 0 0.8, Euro is 2.2, UK is 4.1, Canada is 3.7, and Australia and New Zealand are 2.2%, right? So if you are an investor, you want to invest, where will you put your money? You will only invest in United States asset because their interest rate is still higher. So we still have a stronger dollar. So in terms of interest rate differential, the dollar asset are still calling the shots, right? That's what I'm trying to say. That the last reason I said, right? I said the market believes that the Fed cut, the Fed can cut rate slowly while keeping United States economy stronger. You can see, right? So the United States economy is still strong despite the rate cut, right? So they did this so that it will not affect, the economy, right? So a mind rate cut is a strong economy. That's why we have bullish dollar, right? So I'm just trying to remind us, despite the rate cut on Wednesday, the FOMC on Wednesday, the dollar did not fall. On the norms, the dollar ought to crash, but this is where fundamental comes in. So these are the reasons, and I said this before it happened, right? So that is why you need to pay attention to details, attention to fundamental analysis. Now, the week ahead, this week, right? Yeah, I thought a prolonged US shutdown will likely we delay a batch of major releases. That's true, but private sector report and key any result will still unveil fresh insight on the US economy. There will be a headline by ADP employment report, ISM PMIs, and University of Michigan Consumer Sentiment Index. In the meantime, earnings are due for Palantir, AMD, Berkshire, and Hathaway, McDonald's, Qualcomm, and all of that. Then on the monetary policy front, rate decision will be taken by Bank of England, Reserve Bank of Australia, Swedish Riksbank, and North Bank, right? So Central Bank of Brazil and all that. Additionally, industrial sector data is awaited from Germany and Italy. Labor updates are due for Canada, and inflation prints will be released by Switzerland, then South Korea and Turkey. Lastly, China will post its broader private PMIs, right? So let's go to the weekly the weekly activities, right? Mainly on Monday, this is Forest Factory. So on Monday we have PMI for Swiss France, for Switzerland, US ISM manufacturing PMI, right? So the manufacturing sector of the economy. Then we have Bank of Canada governor, right? Mark claims he will at least be done on Tuesday. We have a decision for Australia, and they also have press conference after the decision, right? Then we also have job listing for United States, right? We also have an unemployment rate for New Zealand and employment and unemployment rate, right? Then on Wednesday we have ISM manufacturing service. So this is service sector of the economy. So the previous one was manufacturing, which was Tuesday. On Wednesday we have service sector of the economy, the ADP non-farm employment change. Then on Thursday we have a Bank of England monetary policy, right? And based on the report I have here, they will likely hold rate, right? Yeah, they're set to hold rate, right? They are not cutting rate, so they're set to hold rates in their rate decision meeting. So have that in the back of your mind. So they're expected to hold rates. So that's going to happen around 1 p.m. GMT plus one. Then tentative unemployment claims, right? Then on Friday we might have the NFP. So you are seeing tentative here because the United States government shutdown is still active. So tentative we might have NFP, right? You know, for the past last month we did not have NFP, right? Yeah, we did not have NFP. So sorry. And so like I was saying, last month we did not have NFP, right? Yeah. So let's see tentative until the US government shutdown is resolved, right? Yeah. So that's why we're having all these tentative informations. So these are the activities for, excuse me. So like I said, these are activities for the week based on the Forest Factory. I came to Forest Factory because oh shit, network. Let me get this in over for corner. Excuse me. So I came to Forest Factory because of the NFP that is tentative, right? But all the same, what we have here, the data are the same with investing.com, right? We can see that the data are the same. So, but investing.com is saying on Monday there's nothing, but Forest Factory, uh, we have some things on that Monday. We have information from Swiss National Bank, right? Yeah, but all the same, the data are the same. Monday, ISM manufacturing. On Tuesday, Reserve Bank of Australia and job listing. And on Wednesday we have ISM manufacturing service and right. Then on Thursday, Bank of England, report, right? Yeah. So let's just head straight to the chart and do one or two fundamental analysis, right? Yeah. All right. So this is the United States, right? Yeah, the dollar, right? So for me, I'm still bullish on the dollar because like I said, the rate cut did not really make any difference because it's a hawkish rate cut, right? Because the tune that Powell gave was he indicated that the rate cut will be hawkish. Let's take a look at this, right? He said dollar gains as Powell avoids committing to December rate cut. So what he said, the dollar rose after Federal Reserve Chair Jerome Powell said it's not certain that the central bank will cut rates again as the next meeting in December. So Bloomberg dollar spot index rose as much as 0.4%, right? So it left uncertainty in the market, and when there's uncertainty like that, which we expected, so dollar rallied sharply on Powell's comments that the December cut is not a foregone conclusion. Bank of America Corporation Strategist Alex Cohen said so that this was a bit more guidance that the market was expecting and pushed against December pricing, which was nearly fully priced. When I did the analysis the other day, the last week, I said they have already priced in for the rate cut. institutions have already adjusted their portfolio to take the shock. So they've already priced in. That was why the dollar rallied. Now, look at this. For me, the dollar is still going to be bullish. What are the reasons, right? Yeah, on a medium term, it's going to be bullish, pending when Powell will likely give a dovish tune. But for now, it's still going to be bullish. Why I said the Fed rate cut, the Federal Reserve cut rate, but signal a less certainty of the December cut, meaning policy may stay tighter for longer, right? So a tentative U.S.-China trade truce reduces one more trade risk supporting the dollar. Now look at this. We are aware that the United States and China, they've met and they agreed on one or two, but they said that the U.S.-China trade truce is not truly great. What are the reasons? Now look at it. Said the U.S. President Donald Trump described his meeting with Chinese leader Xi Jinping as truly great and rated it a 12 out of 10, right? He said the meeting resulted in a 1 year truce with China agreeing to delay export controls on rare earth metals and revive purchases of the US soya beans, and Trump taking his threat of 100% tariff on Chinese goods off the table. So the agreement allow China to retain its leverage over the US, with Trump acknowledging that the 1 year deal will I think be very routinely extended. It might be extended, but it has happened, right? So we are seeing the reason why it wasn't that great per se, because other things are still on the table, right? So the US economy still outperforming pairs. You understand, right? I've said it before, because of despite the 25 basis point rate cut, right? The United States, the interest rate and GDP and all of that, right? The GDP of 4% and versus 2.7% consensus, right? Despite the shutdown. So the US economy is still solid. That is what I'm trying to tell us. So export control and rare earth metal dynamics favors the US. Because the US dollar as safe as a safe asset amidst global tech decoupling, right? So if the very tendency that the dollar might fall, it's going to be government shutdown continues, right? But that will not even take that long, although they will resolve it. The if the Fed choose to cut trade aggressively in December, the dollar strength will reverse. Without this, I'm telling you, I am still bullish on the United States dollar. So for me, I'm still bullish on the United States dollar. So we are bullish on the United States dollar. That means we bullish on the United States dollar, right? Now let's look at gold, right? Just look at gold. That's what I want to see on gold. I say, for me, look at this beautiful analysis. Right? I say, gold is bearish short term, bullish medium term, right? Yeah, all this why gold has been bullish, right? So say gold is bullish short term. So what are the reasons for this short term? Say gold trading heavier this week, two consecutive weekly loss in report. Then rising U.S. yield and stronger USD reduce appeal of gold safe haven narrative. Now let's look at the US 10 years bond yield and the US 2 years bond yield, right? Yeah, this is daily time frame, right? So you can see the US bond yield is rising, right? Yeah, so whenever the US bond is rising, it means the dollar should be strengthening and at that point in time, right? So if you look at the 2 years as well, you see that it's also rising as well, right? So these are the reason why the dollar is unattractive at this time, and as well, if you look at the volatility index, like I've always said before, right, it is used to check the uncertainty in the United States equity market and all of that, right? You can see that it is below 20, which is no longer under threat, right? Yeah, so you can see that then the bond price have started dropping as well. Look at the bond price, right? That means investors have started pulling off funds from the bond market, right? But that is how it is. So the bond price have started going down massively. So with this, you can see that the gold, like it says, gold may likely go bearish for now, right? Because the uncertainty and the safe haven aspect of it has gone. And then for middle term going to be bullish, right? So structural risk, US China tech war, export control, geopolitics, right? Favors gold as hedge. Now, if this US, Russia, geopolitical tension, if it's coming up again, then I think the United States dollar we start, will rally again. So if global growth stalls and inflation persists, gold could be beneficial. Gold could benefit from low real yields, right? But look, right now the yields are really doing well, right? So if the that means the bond United States bond market is really doing well, right? That means which means gold should fall. Now let's look at the Japanese yen, right? Um, I so much believe on this Japanese yen for a reason to be more bearish. Now look at this. On I think this week, and we have more Japanese news that really show that the Japanese economy is really doing badly, right? Yeah, last week I talked about Takeshi won the vote in the majority of the house again won the vote, and she's a dovish person, right? She's a dovish person. She's not a hawkish person, right? So that is why, and as well, the interest rate meeting for Japanese yen that had last week, it was a change, right? So say yen weakens as investors view Ueda's comment dovish on this. So Ueda is the Bank of Japan chairman, right? Kazuo Ueda, right? So you can see that the rate of change and the tone he gave from that meeting shows dovish, right? So that means they are not going to hike rate. So the Japanese yen will likely go down. So the yen slump to a 8 month low after Bank of Japan Governor Kazuo Ueda said that the central bank did not risk falling behind the call following its decision today to leave the benchmark interest rate unchanged. So we saw that the interest rate was zero. The yeah, the Japanese currency fell as much as 0.5 to 153 per dollar. So we saw what happened right. That number one. Then the second one. Yeah, it says the Bank of Japan sits tight on rate with two decent. So this is the Bank of Japan, board, right? You can see out of I think eight or nine of them, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. They have two decent. So two persons objected to say they should hike rate, while the other nine persons say they cannot do that, right? So the Bank of Japan policy board left is benchmark interest rate or change at zero point 0.5 despite Governor Kazuo whether giving subtle indications that the rate hike is coming nearer. You can see, right? So two members dissented against the decision, and whether said the central bank want to see more data on domestic wage setting behavior before adjusting rate. Right? So the yen weakened after the decision, and some economists noted Ueda's effort to indicate the potential move at the end of the year. So with a Bloomberg survey showing almost every Bank of Japan watcher expects a hike by January. So by January, that's when they might likely talk about rate hike. But for now, not at all. The third one says Bank of Japan policy which shows caution under Takeshi's analysis, right? So we saw that I said the Bank of Japan decision to leave rate unchanged reinforced expectations that monetary tightening will proceed cautiously under the Prime Minister Sine Takaishi, sending the yen lower and uh, and supporting the government's bond, right? Yeah, so you can see why Japanese yen is not good. It's not bullish, right? It's not going to be bullish, right? So you can see why the yen is bearish, right? So the Bank of Japan held policies steady. So we saw that the head rate steady, so no urgency to hike rate to hike. Sorry, no urgency to hike, right? Despite inflation and rebounding in some data. So the US yield rising widened the differentials, right? Posting pressure on yen. So in as much as the US bond market is going up, it's a direct effect on yen because of carry trade, right? Yeah, because of the carry trade, right? So new Japanese government, right? Takeshi, right? Leans physical and monetary easing, not hawkish reform. So, like I said, she is a dovish person, so she's not she's more on a monetary policy easy, not tightening kind of person, right? So the only way the Japanese yen can be bullish is when the stock when the if there is a shock risk of if there's shock risk of that means there's safe haven when yen could act as a safe haven, right? Then number two, if Bank of Japan intervene, similarly the Bank of Japan intervention or a signal tightening unexpected yes strength, right? So now I think I will likely okay, let me take this off. I think we're aware of it already. So there was a time when yen went as far as 160. I think this high, and there was intervention. Intervention means when the yen has weakened a lot, right? Yeah, the governor of the central bank he will likely intervene. That means he will sell the dollar to buy the Japanese yen. By doing that, the yen will fall. But we're expecting yen to get as high as 160, right? Yeah, expecting yen to get as the yen to US dollar to rise to about 160. That means we're saying the yen is negative. Now, if we're saying that the yen would likely crash further, that means we're expecting more of the yen to go to the downside, right? Yeah, we're expecting the yen to fall more to the downside, right? Yeah. Then let's look at GBP. Like I said, in as much as the dollar is bullish, GBP, which has a strong inverse correlation to the dollar, should be bearish, right? Yeah, apart from that, sterling sold off to 1.13, right? Below 200-day EMA, right? That is technical damage. So, swap market increased chances of Bank of England rate cut, right? Which likely give us a dovish outlook. So, UK economy showing signs of weakness. Light data week ahead. And from what I showed us at that time, that they might likely hold rate, right? So they don't let only be bullish only when if the UK data surprises strong or budget is extremely pro in favor of the growth, right? So GBP could rebound. Global risk on might benefit GBP, right? Yeah. So for now, GBP is bearish, right? In essence, all GBP pairs should be bearish, right? That is what it is, right? GBP pairs should be bearish, but especially GBP USD should be bearish, right? Then the euro as well should be bearish in as much as the dollar is bullish, euro should be bearish. So what are the fundamentals behind the euro being bearish, right? It said growth in eurozone is weak, right? So German and Italy has what faces stagnation, right? Yeah, because of we over I think early last week we saw that Germany and China they had I think EU and China had meetings, but the meeting did not favor the European Union as well. And also, China as Germany, I think Germany got a German government confiscated the Chinese company, they converted it to the German company. So right, so because of that, China has to withhold some of export of raw materials to German economy, and these raw materials are also needed by the European Union. So yield differential. So in as much as US 2 year bond yield, right, is riding high. So we can see that it's going strong, getting stronger, right? Yeah, but it's getting stronger. We can see that it's even affecting everything, right? Yeah, it's affecting everything in the market, right? Then euro is exposed to export control, rare earth supply risk. I just talked about it just now, right? And hybrid warfare Russia. So I talk about the supply risk because of China, right? Yeah, which happened in recently, right? Yeah, as the government seized Japanese company, converted it to a German company. China stopped exportation of rare earth materials to Germany, right? And Germany is the most powerful um economy in the EU, followed by France, right? So the only way it can be bullish is when the global risk of occurs, right? Euro could benefit as a relative safe haven and all that, although I don't think it's going to happen. Euro has never been a safe haven asset, right? Yeah, so a surprise hawkish shift by ECB, right? Yeah, they might say, okay, they might likely, hike rate and all that, but we know that they're not going to hike rate this year, that they're still going to hold rate, right? Yeah, so EU is bearish, right? So let's head over to or Canada. Canada was slightly bearish as well. Neutral was slightly bearish. So for me, anything against the United States dollar right now, I don't think they're going to be. They're all bearish, right? So Bank of Canada cut rate, right? The economy is stagnating seriously, right? So US Canada USD card approaches 6 months high, right? Yeah. So say though Canada performed best among the G10 in dollar strength in the environment, structural weakness remain. Therefore, nevertheless, structural weakness still remain. So the only way card can be bullish is when commodity exposure, oil and Canadian trade ties could support card, right? And if commodity rebound, right? And over during the week we saw that US United States economy, US and Canada, they're trying to meet again to discuss the tariff issue. At first Canada blew off the United States, and they were slam tariff and all that, but now they want to renegotiate again. So I think with that one, something can happen. So if USD weakens, card could benefit. So it's bearish. So for me, it's bearish. So the last one is going to be Aussie, Australian dollar, right? Australian dollar was slightly bullish per se. What's because Australian CPI elevated by this, right? Unlikely to cut soon, right? So what they are trying to say that Australia, they like to go to hold rate, right? Yeah, I think we have Australian news this week. Or we have it this week. The supply chain on critical minerals are packed. USD, what I don't know the mineral, right? Yeah, so give structural boost, right? So right now, there might likely be recovery for Australia earlier in October, right? So though we're in November now, right? So we've seen the only reason why some of these currency can be bullish or bearish, right? So the dollar is bullish, right? So for me, dollar is bullish. So I'll still likely. Just let me take this off. Right. So we are still going to look out for bullish move for the dollar, right? Yeah. So let's see. The dollar can use market can use this level because this level is acting as a flip zone, right? Yeah. Market can use this level towards come retrace and go, right? Possibility, right? Yeah. Yeah. And yeah, market can use here to rally and take off from there. Like I said, dollar is bullish. Gold is bearish, right? So let's see. Gold is bearish. So this plays flip zones as well. So price might, but if price might likely going to come up, we might likely use if this place does not hold as a flip zone, then price might likely rally all the way to this high, take out this play levels and come to the downside, right? Yeah, because structure we have liquidity rate over there, then price might come here and head all the way to the downside, right? Yeah, so let me see the yen index. The yen index. Okay, the place did not hold, so I marked that until last week it didn't hold. So I'm looking at this point. Let me see. Yeah, so flip zone can also occur here. Flip zone can also occur at this point, right? Yeah, so this yen index, so price might peak go sorry. Price might go to the downside from there, right? Yeah, price might go to the downside from here. So I'm seeing price going to the downside from there. Seeing price go to the downside from there. That means if the yen pairs, if the Japanese yen is going there, that means all the yen pairs should be bullish, right? Yes, JPY, GP JPY, CAD JPY, Euro JPY, Aussie JPY, CHF JPY, and yeah, and the likes of it, right? So that is what I'm expecting. So for USJPY, I'm just going to expect more bullish, right? So for levels, for price, my come all the way to this level, and we can rally, we can take price all the way to the upside more, right? Yeah. But if price break this level, right? Yeah, if price break this level, sorry, if price break this level, yeah, let's say we can retest, yeah, and we are going upward further to the upside. So there's no way USD JPY is coming down. Except we see dimension, and that dimension they have to announce it before it will likely happen, right? So we're expecting more push to the upside. For this, yes, JPY. So let's see. price might likely rise early all the way to this level before coming down. Possibility, right? Yeah, price might likely make use of that point. Let me go to, I think I marked this place before now. Okay, let me go to 45 minutes time frame. 45 minutes time frame. 45 minutes time frame. I think this place my hold, right? Let me take a look at this place. This place my hold. Though there are levels anyway. There are levels that might likely make this place to hold. So I'm still looking at price. This level's holding, right? Yeah, this level can hold. Yeah, this level can hold, and even here as well can also hold, right? So this is what these are the levels I am looking at, right? The might likely hold the Euro USD, and I think Euro USD will be the same for Euro USD. We know it will be bearish, so I think these levels can hold, right? And let's see the price coming here before coming down, right? So it's 2 hours time frame, right? So for me, that level might hold, right? Yeah, and price can also use here as a price can also retest this place and go to the downside, right? Yeah, that is what I'm saying. Price can also use these levels too. So depending on where price go, but for me, I'm going to put my eyes on this, right? So whenever this place holds, then we are good to go. Even here as well, right? Here might also price might also come here because this is an impulse move, right? Break of structure. Here can also hold as well, right? Especially this level, right? Yeah, and yeah, we can easily get good levels. Price can easily trade off that this point, right? Price market might trade off of this point, and also this point can market can also trade off too, because this place we have good levels here, right? Yeah, we have good levels there, right? So this place can also hold, right? This is 45 minutes. Nevertheless, price market can come here and rally all the way to the up again. So this is the DSY, right? Yeah, so it can happen that way, right? Okay. Have I talked on this? Okay, USD card. Okay, but bullish or USD card. This level, that is what I'm looking at for this and also these levels too, right? So, but let's see how the market will likely move this week, right? Let's see. Let's see how the US market will likely move this week. Aussie, AUD, I'm not interested in any of that, right? JCHF. JCHF the same. Let price come hit this level and move to the upside, sorry. Okay, and also these levels is also very good as well. Yeah, so these are the levels I'm going to look out for. So I'm expecting retracement on tomorrow when the market opens tonight. Right? So tomorrow Monday I'm expecting retracement. Then I think we can push price all the way to the upside, right? So that's my analysis for the week, right? So in case you've not subscribed to my channel, can you like, comment, and turn on your notification bell and subscribe to my channel and get more information, right? Like I've told us, fundamental controls the market. So we saw what happened on during the week when immediately the prime immediately the head rate, right? We saw that Japanese yen started coming down, and as it was coming down, all the yen pairs were just getting stronger. We're just buying all the way to the upside, right? So you can see the importance of fundamental analysis on the market. Look at the OEM pairs that they started rallying just like that because of the you know the new prime minister, right? Yeah, and the rate meetings that was held over the last week, right? So we saw how it affected the yen. So that's just it for me. Stay put and have a lovely week ahead. All right. Thank you.